Okay, so what we have here is a sideways quiet channel from January 11th. I'm sorry, January 16th, 2013 on SVXY, and what we had was a sideways quiet channel where it was emerging from the river, and by the usual way with a entry at 71.40 with a 30-cent stop, and it went as high as 71.70, so 1 hour in hand, and then started chopping around sideways, and then about 11:45-ish, I get the regression line crossover signal outside the river while price is failing to go higher. That's when I'm supposed to get out of that, not later than that signal. So that's where I'm supposed to exit, and then certainly not later than price crossing the Bollinger Band mean. So I should get out by the first blue circle. I have to be out. It's a mistake to wait for the Bollinger Band mean, because that's what the normal behavior is, that if it fails after an extreme move up, it's going to come back to the mean. So that's exactly what it did. It didn't fail much further, so I stayed in the trade because I had a belief that it was going up. It just chopped around sideways, and then here at about 12:30, it fails, and then it's breaking down out of the river. I finally exit at 71.25, and that's a minus 0.5 R. Now, this is a horrible execution on my part. To have had 1 R in hand, actually, or maybe 0.7 R in hand by the time you get slippage, but to have had a 0.7 R in hand at the signal where I'm supposed to get out, and then leave that money exposed to the market risk with no reason to believe it's going up based on the evidence of my eyes, and then to take a minus 0.5 R, that's giving up 1.2 R from failure to follow the rules. So that's just horrible. And the answer is I let my beliefs get in the way of the rules. What I should be doing is cashing it here and then waiting for evidence of resumption. So if at any time after I'd exited from the blue circle, if it had come and held support at the mean, now what I can be doing is stalking. I could have 0.5 R in hand and then stalking a reentry, so that if instead of failing here, if it goes north of the river, I'm supposed to buy the breakout, then I could have 0.5 R in hand and have a clear conscience and no emotional charge, and this thing should be moving up. So this is, I'm sorry, this was TNA. This is the triple Russell. I mislabeled that, but it's the same, exactly the same principle, interpreted the same way. So that's what not following, that's what letting your beliefs get in the way can do to you. On the positive note, the previous day, on the 15th of January, this is what following the rules looks like. Here's the regression line crossover signal outside of the river, placing a 30-cent stop. It gets to the mean, holds, takes off when it breaks out from the river and the 30-period regression line breaks out. Second entry at 70.90, so that's 2 R in hand with momentum and clearing the previous day's close. Now it's out. It holds support, takes off again for a new high of the day. Third entry, 71.20. I've got 3 R in hand with momentum, and then a triple position on, and it runs right up to 71.95. I felt full. It was getting towards lunch. I decided to exit all 3 at 71.90, and that's what 10R looks like in a very orderly fashion. Once you notice when the 30-period regression line crosses the mean, that's usually a good sign. So we had a sell-off, quick held support, crosses the mean, and then all follow through. Shortly after this exit, the market traded back to about 71.10, a reversion to the mean plus a little bit. It came all the way back to the bottom of the river. So that's what following the rules with low stress will get for you. Okay. So that's everything I wanted to cover tonight. I'll stop the recording there.